say, um, the world's money is the productive capacity of the American people. Now, if you didn't catch yesterday's episode where I talked about the like why it clicked for me why I think they keep referencing Hamilton and what we can learn from what Hamilton did and then sort of like the guiding principles of what they're doing now. Specifically, the way that Hamilton consolidated the debts of the states into the first national bank of the United States. And I think that this is a model for what's coming down the pike ahead of us here, and they're having to kind of accelerate their way through this. And this has deep implications with Iran. And this is one of the things that a lot of people I've seen, really good truthers, really good honest guys, who are like, yeah, the Iran thing was a mistake. It was a unforced error. They're not getting anything out of it, and I want to address why. I understand why people have that perspective. I want to speak to why that is not the case. Why what's happening in Iran is actually fundamental to the changes that are coming. As I was listening to Tom and Larry, they were talking about you talk about like bonds and sovereign debt and currencies and currency values and all this stuff, and it's all very abstract and there's so many moving parts, and it's hard to like keep it all in your head. Like, what does this stuff actually mean? And then you've got like the Austrian observations about value is subjective, and so you have hard assets, and then you have soft assets, and then people talk about like financialization and what does financialization mean, and fractional reserve banking and inflation, and then there's price inflation, there's inflation on the money supply, there's all these different things, and it's like you need to have a graduate degree understanding of finance and geopolitics and global economics to try to wrap your mind around all of this. But Doom Guy with the Cino pulling an LBJ, just dropping jumbo on the table. Thank you, Doom Guy, and Real Stephen Miller. Things are looking up, boys. Boner alert. Make sure you go to forum.kingpilled.com, and in case we hit the goal today, we're over halfway already. If we hit the goal today, then someone who signed up at forum.kingpilled.com is going to win 10% of the total tip take. Go over to forum.kingpilled.com and sign up. So what we've got here is we've got like a massive distortion of value that has gotten to the point where it's impossible for people to tell what something actually costs. There's the whole burrito debate, and there's some of that stuff that I pulled off to talk about in the future. I just didn't have time to get into it all today. But, like what does it mean if a burrito costs $20? What does that even mean? We're saying, oh, a burrito costs $20. And somehow it to some people, it's like, well, that seems like that's too much. It's too much to pay $20 for a burrito. But then, someone might want to pay $20 for a burrito. What does this even mean? What does it even mean that a burrito costs $20? How are we've got these two different things, and we're comparing them to each other, and we're like, oh, this number too big. And numbers are all out of whack with each other. And you can try to trace this back as far as you can go to see, you can highlight the different moments where things diverged, and you can post all the charts and all of that. But at the end of the day, what the problem here is that we have a fundamental distortion between the expected value in the world and the actual value in the world. So if you have your example of the example Rich gave on the stream I played here the other day, where he says you have your kilo of gold, and I have this kilo of gold, and then I give you the equivalent. I give you $100 of paper for this kilo of gold. So we say this $100 of paper is equivalent in value to this kilo of gold, and you're going to go out and it's easier to have the $100 of paper because you can subdivide it more easily. You can carry it around with you and exchange it. It's easier than carrying the lump of gold, et cetera, et cetera. But then I go and I say, I'm going to give you $100, and I'm going to give you $100, and you $100. All of these rooted back to this lump of gold. So there's only still that one lump of gold, but now there's all these different dollar claims out there for this lump of gold, or paper claims for this lump of gold. And then people begin building more and more things on top of those paper claims. You lend against the paper claim because it's like, well, I have this paper claim, and I'm going to bet that I'm not going to need to reunite the paper to the gold before I can get whatever money I can get off of this next derivative transaction. And so people make bets, and then they make bets on the bets, and then bets on the bets, and bets on the bets on the bets. And eventually you get to the point where there's so many different people all trying to make claims to the same smaller bundle of assets that are actual real assets. And so there needs to be a leveling of the claims that are out there and the claims that are able to be fulfilled. So there aren't fake claims, there aren't bad claims, there aren't unfulfillable claims to value out there. And so there's like different ways that this can go. You could either have all of the claims collapse down to the actual root collateral, the actual hard source of value. You could have them all collapse back down to it and kind of like pretend the last however many decades or centuries didn't happen. This is going to be catastrophic. Or you can have the relative values of those actual fixed assets expand to match the claims. So what this would look like is the price of gold skyrocketing, the price of Bitcoin skyrocketing, the price of silver skyrocketing, et cetera, et cetera. And you have all the different types of, there's land, there's all these different types of assets that could be moved up. But if that happens too fast, like if Scott Bessent came out tomorrow and said that like we're going to pay $50,000 per ounce of gold to buy your gold from you, it would break the entire financial system. It would completely bankrupt like every financial institution in the world. But that's kind of what has to happen. So the question is, can this happen in an orderly manner? Can we take enough time for this to happen to bring these two? We've got the claims on value side of the ledger, which is really, really huge. And then we've got the actual existent value that we recognize as value that's really small. These need to balance. How quickly are they going to balance out with each other? If you do it too fast, you break everything. If you don't do it at all, or you do it too slow, then everything breaks. So like you either break everything or everything breaks. You have to balance this somehow. So we need to find out what things are actually worth, which means we need to find out what all of the bad things that are out there that are distorting what things are actually worth need to be uncovered. They exist in the shadows. They need to be uncovered somehow. And then there needs to be a mechanism whereby these things can correspond to one another again. So the entire world. No.
Boner alert.
I thumped the mouse here and clicked the soundboard again. Dave says I'm at 30 minutes left in me. What is the goal? We are $230 away from the goal. So what the entire world has been built upon the US dollar system. And this is the thing that the guys like Larry don't understand, is that they say, oh, well, like the United States is going to go bankrupt. We've got all of this outstanding debt. And the United States is going to go bankrupt when people realize that debt isn't worth anything, that's bad debt. That's debt that should have never existed, and it needs to be just wiped away. But just wiping it away is like, that debt is the foundation for a whole bunch of other things. And if you just wipe that debt away, then you wipe away all those other things as well. And we need those other things. But here's the thing. We're never going to get to a point where there is going to be a better alternative, because everything has been built on the US dollar system. So for you to have that big bankruptcy moment where suddenly everybody realizes this isn't worth anything, you have to There has to be a better alternative that people can go to that provides all of the same things that they are currently getting from investing in U.S. debt.
Welcome to the suck, homos!
Thank you for the 5 subs, Dr. Doom Guy. Showing up again. So, as this is like the big debate is what's the new thing that's going to emerge that provides all of the same features and values and reliability and dependability of U.S. treasuries. A U.S. treasury is a bet on America's future. It's a bet on the productive capacity of the American people and the expectation that that's going to continue. They're investing in the American people fundamentally. When people buy U.S. debt, they're investing in what they expect to be the future productive capacity of the American people. They tethered themselves to this when they formed the entire Eurodollar system. They tied their